I'd like to spend some time today talking about the emerging markets. We think it's an exciting time to be looking at the EM asset class, and specifically the asset class of EM value. We think the opportunities here for investors seeking great long-term returns are more favorable in terms of risk-reward versus both developed markets and specifically versus EM growth opportunities. But first, a few words on the pandemic. The global pandemic is one of the worst case scenarios for the emerging markets. Emerging market countries are extremely ill-equipped to deal with this kind of an emergency due to the lower levels of healthcare, the lower levels of logistical capabilities, and also the relatively less firepower they have in terms of fiscal and monetary resources to deal with the downturn. Their economies are also relatively more affected given the reliance they have on exports, trade, and manufacturing activity. Our base case for the pandemic is that the U.S. is first in terms of recovery, Europe is second, approximately 6 to 8 months behind the U.S., and the emerging markets are more like 18 to 24 months behind the U.S. However, we believe the trajectories are the same. We believe the fixes have been produced and are in the mail in terms of vaccines and pandemic protocols, and it's simply a matter of time and execution to get to normalization. Many reopening trades have already played out, especially in markets like the US and in Europe, and there are quite a few that have played out in the emerging markets as well, but there are also quite a few that have not, which creates a bigger opportunity from where we sit today for investors versus what's still available in the developed markets. To put this in the context of investment performance, it's no secret that emerging markets have underperformed developed markets, not just since the pandemic, but really over the last 10 years. Emerging markets value specifically has underperformed emerging markets growth as well. We believe we've hit the inflection point. If you look at the emerging markets since November, emerging markets value assets have done substantially better than the emerging markets growth. And if you look at the most recent trends in terms of earnings and cash flow acceleration, we believe that the emerging markets are better poised over the next 12 to 18 months to show a more rapid rate of recovery given that aforementioned lag. If you have interest in discussing any of these points with myself or our team, please reach out to Barrow Hanley. Thank you for listening.